Yes, it's good afternoon, I have to say, ladies and gentlemen. Thank you for the invitation to this meeting, to the organizers. Yeah, well, I will talk a bit about the European economic outlook and the steel market trends in the European Union. Some of the things I have prepared have already been said, so I can be quite brief. Here I have some data on the global economic environment. You see there we have a rather stable, or that are the IMF forecasts, but the OECD forecasts released recently are not that much different. We have a quite stable, but in a longer term perspective, low growth of world output. We have a change in world trade, which differs substantially from world output. In the forecast, the elasticity of world trade over world output is slightly above 1%. In view of former revisions of this elasticity, that seems to be a bit optimistic. We have a lot of tendencies which currently dampen world trade. We have what we see is a near sourcing which is going on in many countries. We see an increase in the number of trade restrictions, and also what is a more recent factor which influence world trade are sharply increasing shipping costs due to the crisis in the Red Sea. At the same time, inflation is coming down, but it is still at the elevated level. It is still above the target of monetary policy in many countries. And over the last years, we have also seen that inflation forecasts have often been revised upward. Sorry, that was the wrong direction. I want to focus a little bit on two countries here. The first is the US economy, which gives reason for some hope. This is one of the large economies for which the forecasts have been revised upward. You see here the forecasts starting in January 23. Then the forecast was only about 1%, and now the IMF has doubled the forecast. So inflation is coming down faster than expected in the US. We have a very strong job growth, and that's a political economy reason, but we have never been in a recession in the United States in the year of a presidential election. On the right side, you see the data for China. China now is on a growth path of about 4.5%. Yesterday, the People's Congress, the growth target was announced, which is 5%, and we not very long ago we have seen their rates of 8 or of 10%. So it's on a low level for various reasons. We have already mentioned the problems in the real estate sector. China is an aging economy. We have also redirection of trade of major trading partners. And finally, that's an aspect which is not discussed that often, but China for a long time benefited from adaptation of technologies which have been developed somewhere in the world, but the higher the productivity level is, the less it can benefit from this adaptation. What is still a problem and a risk, and I have shown here an indicator which is published by two researchers in the United States about the geopolitical risk, and it still remains elevated. That means that we also can experience some surprise in our economic development due to geopolitical factors still. That was often the case in the past. You see here this spike when the Russian war against Ukraine started, but we are still at a rather elevated level. Coming to the European Union, for 2023, we have the flash data which say that the economic growth was 0.5% in the euro area as well as in total EU. If we look a bit at the countries, a relevant share of the countries had experienced a GDP decline. For 2024, a rather mild recovery is currently expected. One reason behind is that the monetary conditions still weigh on the growth. Here in this chart, I show you that is a synthetic figure which is calculated by the ECB, but it shows a composite cost of borrowing indicator, and you've seen in early 2020 it was at round about 1.5%, and currently we are above 5%. Even it has not been deteriorating, or the borrowing has not become more expensive over the last few months, but that is still a factor weighing on growth. It also has the consequence that the prices of residential as well as commercial property has started to fall. In some regions, even a relatively strong decline. And we see an increasing number of bankruptcies because many companies, they were able to stay in business when the financing costs were low, but now they are facing increasing problems. Sorry, I wanted to go back to this slide. When we look at the latest figures for production and orders, they suggest that also the first quarter in 2024 will be rather weak. And forecasts have been revised downward over the last quarters anyway, and so another negative surprise cannot be excluded. Currently, the European Union is a bit more optimistic than professional forecasters, and this often is a sign that maybe the forecast will be revised downward further. Here you see the forecasts. 1 year ago, we expected a growth rate for the European Union in this year of around about 1.5%. Currently, the forecasts are down to 0.8 or 0.6%. And as I said, some negative surprise is not excluded. If you look at the different countries, an interesting point is that Spain is one of the countries which is currently bearing growth in the European Union. So here the forecasts also have been revised upward, and that the main dampening factor comes from Germany. 1 year ago, we expected a growth rate of 1.3. Currently, we are at a growth rate of 0.3. And my personal judgment is that this even is a quite optimistic scenario, because it would assume that growth will speed up in the rest of the year. Inflation remains an issue. It's still at an elevated level, though it has come down in the recent months. This is mainly driven by energy prices. Food prices, they continue to rise, even if at a lower rate. We expect now some moderation of inflation for 2024, but we are still above the ECB target. And if you read currently the minutes of the ECB Council meeting, they have not signaled yet that they will lower the interest rate, so they still see their fundamental problems with the inflationary process. One of these fundamental problems is that high inflation increasingly translates into higher wages. We see this here. This is the index of negotiated wages, and it currently shows an increase in the European Union on average of around about 4.5%. And here you see the unit labor costs. They are driven from two sides. On the one hand, increasing wages, on the other hand, reduced capacity utilization, and so unit labor costs currently increase at rates round about 7% according to ECB calculations. Figures from the European, from Eurostat are a little bit different currently. Okay, let's come to steel demand and what all this means for steel demand. This is currently the production in the main steel-using sectors that are data now for the euro area, not for the European Union as a whole, but the difference is not that large. And what you see is that tubes, mechanical engineering, construction in all these sectors in the course of 2023, production was reduced. The only sector which had a stable production was automotive, but we should not forget that automotive production is already at a relatively low level compared to the figures we have seen before 2019. Leading indicators, they suggest that we will see a further deterioration in the production in many sectors. In the upper graph, you see that building permits have come down. That is a result of the increased financing costs. You also see that companies, they assess new orders increasingly negative. That also means that the economic environment for the steel sector is set to stay hard, and we cannot expect a quick recreation here of demand. Here I combine these production data I've shown to you to the steel-weighted production index, and you see it has come down clearly during 2023. And as I said, the forecast is that I also would see a further decline, at least in the first quarter of 2024. What does it mean for the steel market? Here is a graph on global steel production. We have already seen a similar graph in one of the earlier presentations. 2023 was the second year in a row in which global steel production declined, even if mildly only. We have also a weak start into the new year. What is interesting, but also one of the earlier speakers pointed this out, that this weak production primarily is caused by the development in China, and then in the rest of the world the production shows an upward trend. So China's share in world production fell recently to a 5-year low. So it was, for some months, it was very close to 60%, but now it's considerably lower. For the European Union, we have seen that production of steel is still showing a downward trend under certain fluctuations. And just looking a bit at the different aspects of the market, we see that the export of finished products, that it is rather stable on a low level in historical perspective. We see very volatile, but recently also declining imports of finished products. And if we combine all these with some other information, we can calculate apparent steel consumption in the European Union. And we also see that apparent steel consumption has declined in 2023. This is the latest Eurofair forecast for the European steel market. The GDP forecast as well as the inflation forecast is more or less in line with the forecast that are currently in the market. The steel-weighted production index, it shows a very, very, very small increase in 2024 and then a rebound in 2025. Apparent, and then it becomes a bit tricky. Of course, the link from steel-weighted production is at first, it is to real steel consumption. The Eurofair forecasts real steel consumption, which is quite close to the development of steel-weighted production. And then in the apparent consumption, we see we had a destocking in 2023. Apparent consumption was negative, and Eurofair forecasts a strong increase of apparent steel consumption in 2024, which means there is a restocking. However, I have some doubts about this forecast, and my impression is that we have something like a structural change here in the steel market, and I will try to show you this on 2 or 3 slides here. What I show you here is you see the blue lines, that is year-over-year growth of apparent steel consumption, and the red bars, that is the year-over-year growth of the production of steel users. And what you see is in the past, we always had a correlation between these year-over-year growth rates as well as of the levels, which was relatively high and significant. After 2021 Q2, this correlation, it disappears. So for the growth rates, it's low, and if I would make a test, it would be not statistically significant, and in levels, it's a zero. So now the question is this a typical stock cycle, so that we had a strong destocking in 2022 and 2023, and we will see now a refill of the stocks, or has something different happened? This seems to be, or that seems to be a basic problem, can also be seen in the different Eurofair forecasts. So here I have for the years 2022 and 2023 the Eurofair forecasts, and then we have the outcome. And what Eurofair always forecasts is that steel-weighted production, apparent consumption, and real consumption is more or less in line. For 2022, we have growth rates of about between 3.2% and 4%. For 2023, we had a decline between 0.6% and 1.6%, but it's more or less in line. And then we see the outcome. The outcome was strongly different. Steel-weighted production was not, the forecast error was not that high, but they had problems to forecast real production, and they have problems to forecast apparent consumption. The problem is, and we should have that in mind, what we can observe is apparent consumption. So real consumption is a calculation we do afterwards, after taking into account the change in the stocks. But on the stocks of steel, we do not have really that excellent information. We have some pieces of information, but we have no full data set on that. And therefore, what I'm looking on is the relation of apparent consumption to the production of steel users that should somehow present the steel intensity of growth, and then the fluctuation around the trend that are more or less can be interpreted as stock cycles. This is this relation of apparent consumption to production of steel users. And we see here I have for the years 2014 to 2018-19, it was more or less stable at a certain level. For Germany, where I have more detailed data, the situation is the same. And then we see we are now at a downward trend. It's still hard to say which part of the decline is really a decline of specific consumption, so that our economy will be less steel intensive in future, and which part is cyclical, and therefore will normalize over the next years. Giving this now longer history of forecast errors here, I'm a bit skeptical whether we really get back to the old levels. There are also some potential informations. So, for instance, we try to get more energy efficient, so weight plays an increasing role in many products, so that we tend to use less steel, for instance, to buy a car. We also have changing production patterns of steel users. For instance, in the construction sector, we have in many countries less new buildings, but a larger part of the investment is concentrated of thermal isolation of existing buildings, which also would be less steel intensive. And there may be some other factors that explain that. There also might be a fundamental reduction in the stocks, which also could have contributed to that, but we will have to analyze this more in detail. So that are my thoughts about European steel market I wanted to share with you. And if you have any questions, here are my contact data. And of course, I will be pleased to answer the questions here from the audience.
Are there any questions from the floor for Professor Döhrn?
Rather than a question, you've got a problem with apparent steel consumption. How can we help you to increase your apparent steel consumption? Because we need you to increase it so we can export.
Indeed, apparent steel consumption is a calculation when I take into account production and the exports and imports of finished products. I do not have a problem with it. That is just what I observe, and it's going down. And I think the interesting question indeed is, as I made the point at last, is it just cyclical? And we will have then a strong increase, which also could solve a bit the problem of overcapacities and so on. Or is it fundamental? And if it is fundamental, that also would give additional fire to the excess capacity problem.
Thank you very much. Are there any other questions from the floor? No, I believe so. Thank you very much, Professor Döhrn.